The July print for CPI, which has come in at 7.44%. That's nearly a 15-month high. So just for some context, last month's print was 4.81%. That's for June. And the 7.44% surge, the upmark is year on year. So the July CPI inflation number is 7.44% more than July of last year. And of course, it's a sequential jump as well. So what's happened? No prizes for guessing. Remember all the talk and all the reports that we have done on high tomato prices? Of course, that was going to hurt. That's why we are seeing food inflation really with that big jump, over 11%. Vegetable prices up a whopping 37.34%. So nearly 40% up on vegetable prices itself. Now, the question is this a short-term phenomenon? Because we know that vegetable prices do tend to increase seasonally. We have had first less rains and very heavy rains. Now August is looking a little iffy. So what really is going to be the trajectory? This is the highest print in this calendar year so far, but will it ease off? Devendra Pant, Chief Economist at India Ratings, joining me for more on this story. Mr. Pant, thank you so much for speaking with us today on the show. Your take on the July CPI print?
Simple one word, ugly. This is much more than what anybody had expected. Different polls and others numbers put it at somewhere around 6.6 or 6.8%. But a number of 7.44 is way too high. Just to give a flavor, tomato inflation 201.5%, ginger 171.5%, jeera 100.9%, green chilies 50.4%. Now, these numbers may look it very, very bad, but there are good points and the bad points. Even if one tries to look at it, the one ugly number is your cereals inflation, which has remained in double digit, and it is not coming down. Now, the good part is the four commodities inflation I have just mentioned, the tomato, ginger, green chilies, and jeera. These are all seasonal. Now, if I look at more from and try to put it alongside with what is happening on the WPI. The WPI has been in the negative territory. So what does WPI tells us? It's the input price for the manufacturing sector. It's the producer's prices. It's a proxy for producer's price index, which we have in developed world. Now, just marry it or look at it along with the core. The core inflation has fallen to below 5% after April 2020. So what is happening is the input for the manufacturing sector is going down. A large part of it is because of the way the commodity prices have behaved. Now, even if one takes out the volatile, the seasonal factor, whereby, as you rightly said, excess rain or lesser rain, your vegetable prices will get affected. If you knock off the vegetable prices out of this entire CPI basket and recalculate what is the CPI inflation excluding the vegetable prices, the good news is April, May, June, July, last 4 months, it has been hovering between 5 and 5.5%. Yes, the number is bad. My worrying part is if the cereals inflation, because these are all seasonal, rainfall situation comes normal, the moment the new tomato crop starts hitting market, which could be somewhere around September or so, September, October, the tomato prices will come down. We have already seen there has been some correction. But worrying is what is happening on our cereals inflation.